So bots have a bad name, whether it's claims of election fraud or dystopian sci-fi movies. But most bots are more like this, a simple machine executing a task for you, so you don't need to spend all day hunched over your computer in the dark like some kind of hermit, unless you want to. See, as simple as these bots are, they come with some major advantages over us mortals. They're far more precise and unemotional. If you tell them to jump, they'll say,
"To what coordinates?"
And this is perfect when it comes to the tedious work of trading. Here's a beginner example in action. I recently read a study that took the crypto bear market between 2018 and 2019 and ran a test. They wanted to see if rebalancing your portfolio actually earns you more money. So portfolios were built ranging between 2 and 18 random assets. Then each of those 5 portfolios was duplicated and rebalanced over different time intervals, ranging from 1 hour to monthly. The goal was then to compare those 20 portfolios to the results of the same exact cryptos with no rebalancing done whatsoever. HODL performance versus rebalancing performance. The results highlighted the perfect use case for bots. The clear winner here, by a huge margin, was daily rebalancing. It did the best for every single test and returned much more than just holding those same cryptos outright. The percentages shown here are the returns over simply holding the exact same cryptos. What they found is the more often things are rebalanced, generally the better. However, there is a speed limit because the more you trade, the more trading fees you also incur. That's why hourly rebalancing performed worse than daily. And they also found the more assets you hold, generally the better. Now, it's important to note that they chose random crypto, so your portfolio may end up with different results, but we know that rebalancing is a solid strategy based on data. However, we still have a problem. Who wants to set an alarm every day to rebalance your Bitcoin Shiba positions? This is where bots come in and do the boring work for us. I tested this out myself and used a rebalancing bot for a month on 10 crypto coins, and in that time I returned 18%. By the way, the platform I'm using for all of the bots today is Pionex, since they have by far the most options for this kind of thing, but also just a heads up for full transparency, they are a sponsor of my channel. Now, let's test a slightly more advanced bot. I would still place this one in the noob category, but maybe noob plus. This is the Bitcoin Moonbot. It's a trading bot with kind of a twist to make it more user-friendly. They do this by having extremely large parameters. Let me explain why this is nice. A grid trading bot is pretty simple. If the prices are trending downwards, it buys. If they're going up, it sells without you having to do anything. Typically with one of these bots, you need to set fairly tight parameters and tweak it every few days or weeks. Let's say a crypto is trading at $1. You might set up parameters for it to make trades between 80 cents and $1.20. If it breaks either of those barriers, it will stop trading. I learned this lesson the hard way, and it can sting. The first time I was testing out bots, I started 10 of them for an experiment for a video. One of them was Shiba, before it blew up in price. I invested $1,000, and almost immediately the price blew through the parameter I set and stopped trading. I still made a good profit, but if I had larger parameters, I would have 6x my money in about a month. The Bitcoin Moonbot is different. You can start this thing and let it run for years without even looking at it. That's because of the massive parameters. If Bitcoin is trading anywhere between $15,000 and $150,000, the bot is still running. I tested this out for myself and made 2.5% profit in about 2 weeks. Now this comes with an important caveat. You're not guaranteed a profit with this bot. If prices go down, your bot will also go down. Because remember, it's trading the entire time. You make money with a grid trading bot when markets are going up or trading sideways. Moving on to beginner bots, we can now take the grid bot to the next level. Remember, all this is doing is buying when prices go down and selling when prices go up. You can run one of these bots on really any crypto coin you like, then you can experiment and tweak the settings to whatever you think might perform best. For the lowest effort version, you can simply use the AI parameters to do the work for you, which is probably a good way to start, but you'll definitely still want to check in on that bot every few weeks. Or you can go with the manual setting and not only choose price ranges, but also how many trades you'd like to make within price ranges. And if you're really trying to go sicko mode here, you can hit that advanced setting button and set up a price at which the bot will totally sell, closing up shop and taking your profits for you. Now to one of my favorite bots. It has the most intimidating name, but actually the lowest risk. This is the Spot Futures Arbitrage bot. When investing in one of these bots, you're actually making 2 separate buys, a spot position and a short futures position of the exact same asset. The spot position is no different than a regular old buy. If you flat out bought $100 in Bitcoin, that would be a spot position, also referred to as a long position. A short futures position, on the other hand, is a bet that an asset's price will go down in the future, hence the name. A purchase into one of these bots splits the buy between spot and short in the market. So you're both betting for and against the exact same asset, and this has a fascinating result. Let's say you invested $100 into one of these bots. 50 would be similar to a regular buy, a bet that prices will go up. The other 50 would be short, a bet that prices will go down. The result is your investment dollar amount never changes much, because if prices go up, your long position makes money. If they go down, your short position makes money, meaning your $100 stays right around $100. Now, how in the world can you make any money when you're not making any money? This is where the arbitrage comes in. In the futures market, there's something called a funding fee, also referred to as the funding rate. The reason for this is prices can get a bit wonky. Regular buy and sell pressures in the market can make the spot price and the futures price of the same asset vastly different. This isn't good. It's not supposed to be that way. Because of this, a funding fee can be kind of sprinkled on top of one market to incentivize people to invest within that market. It's easiest to think of it like a balancing scale. You have long positions on one side and short on the other. When prices decrease too far on one side, a funding fee is then sprinkled on top to incentivize investors to move over to that side. And the funding fee can be quite high in periods where the market is changing drastically, or it can be low and consistent when the market is down. But the beauty of these bots is that they're market neutral. You don't make or lose money no matter where the market heads, but you still earn that funding fee either way. I've tested this for about 70 days and made anywhere between 3 and 10% APR, with the average being around 4% during the bear market. And you might be thinking, hold on, 4%? Why would I ever invest in something that makes 4%? Let me explain. This is a portfolio hedge. I like to think of it like a modern equivalent of a bond. The majority of my crypto portfolio is either in lending stablecoins or holding tokens outright. Both of those things come with their own risks and benefits. When markets are uncertain, I'd rather have a bit of cash earning a small amount every day with low risk than putting everything on the line. So would I put my whole portfolio into this? No. But do I use it for another way to diversify? Yes. Now, it is possible to take this strategy and amp it up for higher returns and slightly more risk. You can use the aggressive mode and bump up your leverage to 2 or 3x on a smaller altcoin, and this can turn on the boosters if you want the boosters turned on. Here you can see Tezos currently has a projected return of more than 25% APY. So this strategy can be used with a variety of risks and potential returns. Now, to finish off the advanced section, let's cover a way you can really utilize trading bots to do the work for you. This is with the smart trade function. Every exchange should have this. Have you ever bought a token and almost magically it shoots up in price? You feel like you're on top of the world, but then when you're not paying attention, the price falls back down, wiping away those profits. And later on that day, you're laying in bed telling yourself, convincing yourself everything's fine. It's only paper profits. Obviously, it's not over until you sell. This bot solves exactly that. There's 2 main settings. Let's say you think Luna's going to shoot up in price this week and you want to capture some profits. You can first set a purchase price and quantity that you'd like to buy in at. Then you can set a take profit percentage. This way you can buy Luna, and if it goes up 10% in the middle of the night, you can be certain that you have captured those profits. Now, this is great, but we can take it one step further. Sure, you're happy with the 10% gain, but what if you selected to sell at 10% and Luna ended up increasing 20%? You missed out on double the gains. This is where you can click the trailing take profit button. Let's go with 3% here and see what happens. We make our purchase, it goes up 10% past our 10% trigger sell. It keeps continuing to a 20% gain. This is where price flatlines and begins to go downwards. Your bot saw the price peak and is now looking for a loss of 3% from that peak. Once that loss is hit, your bot sells and you just made a 17% profit instead of 10% by turning on the trailing take profit. Pretty cool. Bots can be a great way to do the boring work for you, diversify, and help you with trades so you can spend your time doing the important things in life, like, I don't know, working on your glutes. But there are some drawbacks here. Depending on the bot, you're still subject to volatility in prices. And these are just programs that do what you tell them to. So if you tell them to do something wild like 3x leverage short some meme coin, they're gonna do it. You just need to be careful not to play yourself. Now you might be thinking, bots are cool and all, but what do I invest in? Can I get all of my investment advice from a robot? And well, I've tested this out for you. Check out this video where I let robots make all of my investing decisions to a surprising result.